Hello, everyone. Welcome back to episode 250 of Sold with Updike Pugh. I'm Weston Pugh, and this is Jeremy Radcliffe with SWBC. And today we thought we would talk about buying a home for mom and dad. I was actually looking on Instagram and I saw a really great reel that came across, and I sent it to you and I said, "Hey, we need to be on the show." And I think this is something that more people need to know about, just because it is such a great financial tool.
Yeah, when you texted me that, I was like, this is one of my favorite mortgage hacks, if you want to call it that. And so what we actually call it, I did a little bit of research. This name kept being thrown out. I think you'd even mentioned on the video. They were calling the Family Opportunity Mortgage. If you go online, you'll find a lot of videos about this. That name doesn't officially exist in the guidelines, but it does exist with both Fannie and Freddie. So the nice thing about this program, and I can speak to this because we did this exact same thing with my parents in 2020, is it allows you to buy a home for elderly parents who can't afford it on their own, and you get to treat it like a primary residence.
I think that is key right there, is that it is treated as a primary residence. And so many times you're going to hear us talk about investments on the show, and we're going to talk about primary. Primary does a lot, and we're going to get into that. So this is a key element to that, is a primary residence.
Yeah, and the benefit of it, so when you think about it from an underwriting standpoint, so what Fannie and Freddie says is, hey, it's that risk reward. So when someone's buying an investment property, it's a bit of a riskier loan as opposed to someone buying a primary residence. Okay. So that comes into play in terms of, we're going to talk through some of the benefits. The other thing I wanted to say first, though, is there is another nuance to this. If you have adult children who are disabled, that's another opportunity for you to use the same program. So anyone who perhaps a disabled adult, the parents can buy the home for the disabled child, and they can also take advantage of this program. So,
it's a great program as this population pyramid really begins to shift.
Correct. So a couple of benefits, and the reason you might want to consider this is the number one thing that we see from people is you get the benefit of the lower rates. Back to this whole idea of non-occupying borrower versus buying as a primary residence. You're always going to see lower rates when you buy it as a primary residence. And so you get to go help mom and dad buy a home, and then you also get lower rates as a result.
Because I was looking at investment property, and I was shocked to see how high those have.
It makes really a big difference on the pricing.
Huge difference. And then at that point, it also makes a difference on what your dollars can actually purchase. So it's a huge difference in both monthly and that purchasing power.
Which is a great lead into the next benefit, and it usually results in easier qualifying terms. Okay. Because we are underwriting it as a primary residence, some of the guidelines on primary, just a little bit more flexible versus if you're doing it as a second home or an investment property. So that's a big win as well.
I think that whole concept makes it fit in so many. I think more and more Americans could actually, or people could get into this then because of those.
Correct, and most people don't know about it. The one thing to keep in mind, we were talking about a little bit before we jumped on the segment, is that you do have to qualify if you own existing home. You would have to qualify with that home along with a new house payment. But assuming that you can, it's a great way to take advantage of this program.
But we were also talking about if a parent wanted to have their income counted, and they could be added to the loan to actually help offset.
So the sniff test, if you will, in terms of whether this works, is that you have to somehow show that the parents can't qualify for the home on their own. Okay. So if mom and dad, if they are wealthy, that may not fit this parameter. But in the case of if someone's like, hey, we want to move mom and dad closer to us, or they're needing help, or there's a transition in their lives, it's a great setup to allow them to, you can buy it, treat it like a primary residence, you get the advantage of the lower rates, and then the qualifying terms. The other benefit that we're seeing a lot of is that I'm trying to see what we had on slide 3. So the lower down payments, one of the benefits is that when you consider it as being a primary residence, you're also not having to do that larger down payment for investment property. A lot of times you'll hear 20% down. Correct. On this program, you can do as low as 5%. So imagine being able to buy a home.
15% is a substantial amount of money.
Tremendous.
It is
a tremendous amount of money difference in terms of you get that lower rates, you get the lower option for the down payment. And this is exactly what we did. We were able to buy a house 5% down and treat it like a primary residence.
And the parents can also contribute to the 5%. Is that okay?
They can, absolutely. Yeah. So
and
if they had funds, they don't have to be. So the other thing that's really interesting about this, there's a lot of flexibility in terms of how it's structured.
Wow.
If the parents want to be on the loan, they can be on the loan. If you don't want them on the loan, they don't have to be on the loan. If they want to be on title, from an ownership standpoint, they can be on. They don't have to be on title, which leads to one of the other benefits. There's a lot of flexibility in terms of how it's viewed from a tax standpoint. So considering what we did was my parents were not on the loan, but we did put them on title. And the reason being is we wanted them to take advantage of the over 65 and homestead exemption. And so that makes a big difference in terms of annual taxes.
So when we look at this is a win program because it's easier to get in at the beginning because of the down payment requirement and because of the interest rates.
Lower boundaries there, yep.
But then it continues to be servicing you in a positive manner because it lowers both homestead and 65 if you work it properly.
Correct, yes.
That's a win.
I was sweating bullets because back in the time we tried to close. This was before Texas changed the law where you had to own the home by January 1st. And so we closed literally on December 31st to make sure that we got advantage of that homestead exemption. But that's now changed. So last benefit on this, and this is probably the thing that I appreciate the most, is it's a great opportunity for kids who are trying to help their parents also build wealth in the process. So if you consider that, hey, we're going to provide mom and dad a house for the rest of their lives, or as long as they want to be there, and then you get the opportunity to, however you guys agree to do it. If they're not on title, obviously it would revert back to you on their passing. What we did was we did something kind of creative. We did a revocable due on transfer on death, and so there's some different title things that you can do that would allow it to, for that, instead of it going through probate on anyone's passing, it just goes directly to transfer of title.
So one of the things that also I'm thinking about when you think about the cost of generating this living for your parents, you're doing it at today's price versus
Correct.
If they don't need adult care until later in life, that is something that happens, and prices continue to go up.
Correct.
And that monthly payment for care is so higher than the mortgage.
Well, and if
substantial. So
kind of the thought process that we went through was my parents lived far away in Texas, and I was dialoguing with my wife, and I was like, we're trying to figure out what's the best case for these guys. And it felt like it made more sense to get them close to us.
Yes.
Not knowing what things would look like in the future in terms of health. And that was a big consideration of, are we going to have to travel back and forth? It was great to have them here. And then also just the cost of living we knew was going to be cheaper now than it would be in the future. And so I think it's a great option. A lot of people don't even know this exists, and it really is one of my favorite mortgage hacks.
Yep. Fix your future costs on today's prices.
Correct.
And that way you can then, as you said, transfer it over, and so it's not an outgoing expense.
Correct.
As rent would be.
And then you're getting also the benefit of the future valuation, that appreciation year over year. So,
it is a definite win when it comes to generating wealth.
Yeah.
It is. Well, what we're going to do is give you a slide at the very end right here that'll give you all of Jeremy's contact information. Jeremy, we really appreciate you coming on the show.
Thanks for letting me share.
Always tons of great information. We use Jeremy all the time. 99% of the buyers that we use Jeremy, as we use him both on our personal and our professional accounts. So
thanks, guys.
Thanks for coming in, and remember, we want to be your realtors for life.